All right, what's happening, folk? So this is the second video for July 31st because every loss is a lesson. So we took a L earlier, so now let's get into taking this second L and actually learning the lessons that we can pick up from today's trading. So a couple of different things I want to mention. I'm just going to kind of play through some stuff I saw here after the fact. Um, So first one, here in the 5 minute chart, was the first candle of the day, the first 5 minute candle of the day. If you notice, we had a run up, a change of character. So we were on a downtrend here, and then we got higher than the previous high. So now we're on a uptrend, and then this was the opening candle, still took us up. And then we came back down. With that being said, whenever we came back down, if I caught this, and if you want to be ahead of the game, always mark out your supply and demand zones. The reason why I say that is this is a supply zone I had already marked out, this purple here. We got right into the supply zone. I did not play this. I definitely thought about it, but I didn't play it. But we got into this supply zone and then dropped right back down. This run up never had a pullback. So this made the perfect sense as far as where the pullback would have started at. With that being said, we came down. We got into the outside of the 5 minute orb mark, the low of the range. And now I'm going to switch to a 1 minute and show you where I actually entered at. So I entered right here on this candle, and you're like, why did you select that particular candle? So I selected to get in here because if you notice, we had our first breakout here. Some people might have entered here, which nothing is necessarily wrong with that, but you need to for sure be wary of where you set your stop loss, because this isn't what I would personally call a significant break. It kind of breaks it, but then it pushes back and it just kind of barely makes it out. On this next candle though, if we notice, we have a shooter. So it shoots way up and comes way back down. The longer the wick, the better. So we had that shooter, and I was like, all right, since we had a shooter develop, I feel comfortable that we are, completely out of the orb range. And I went ahead and entered. So I entered probably right around this area, and I set my stop loss way down here. Or I'm sorry, I set my stop loss back in the orb, and I set my TP way down here. Me being jumpy, I ended up making like 650 on this particular trade. But if I just let it run its course and just let it actually get to the end, this would have been like over $1,000 trade. But I sold probably right around this area, unfortunately. Dumb on my part, I know. But like I said, I got jumpy on it. That was my first mistake of the day. But it's a mistake I can live with because, like I said, I still made a nice bit of money on that trade. $600 a day, if you can average that, that's $150K a year. So that's way ahead of my goal that I set as being where I want to be at once I become what I consider to be a successful trader. So let's go to the next thing I noticed today. So also while we're doing this, I'm actually watching my zones as well because we might have something else playing out. So again, so we're back at the 1 minute. Like I said, I already made my first play here, made $600. Cool. So it this was our demand zone here, because this was you have demand and supply. So supply is always a zone that's above you. Demand is a zone that's below you. So with that being said, it broke through our previous demand zone. But if you notice, it came back up and retested it multiple times, actually. And this is where I fumbled the bag, literally. So I got in probably right around here, maybe, on this candle. And I set my stop loss way up here. and never did I adjust my amount of contracts. So think about it. This time I got in probably around here, and my stop loss was set just barely up here. So I was maybe risking $300-400 to be able to make a huge gain. So this ended up being like a 1 to 4, even with me selling early. So that just puts into perspective how much my risk was compared to my reward. It would have probably been like a 1 to 6, 1 to 7 or so if it actually made it all the way down to this point like I'd initially planned. Anyways, that's neither here nor there. So here, like I said, I ended up buying in right around here, and my stop loss was set way back here above the zone. So the space between here and here, I was still set up for 10 contracts. This, instead of being like a $300 or $400 risk, this was like, I don't know, $13, $14, $1,500 risk, which is ridiculous. Like, you should never be risking that much in a trade, in my opinion, as a new person. Pretty much all the trades I've done that have been successful, I've only risked $200 to $300, maybe $400 at very most, I would say. So I should have been more wary of this before I even went ahead and put it in. As y'all see, it came up and got right back into my zone. I'm gonna show y'all what this should have looked like if I had executed how I needed to. So let's say we had just bought in right in the middle or right at the edge of the zone to the downside. And then we set our loss just on the other side here. And then instead of 10 units, I set it to 5 units, which is probably where I should have been. We're only risking $300. And then I set my take profit. In my particular case, at this point, I was at 52,000 on my account. I needed 53,000 to be funded. So just doing a simple 2 to 1, which would be right around this area, that's literally, it was so easy for this to get down to cross this level. So easy. This here would have took me from 52 to 56. I would only needed $400 more. And as y'all see, it went even further down. So me being me, as soon as I saw it get to about $300, $400 profit, I would have probably been moving this stop loss on along so I can secure profits as it's going. And like I said, this would have been super easy if I would have executed like this. But I didn't. I executed way too early. I did not let it get back into my zone. And I ended up, having to pay for it in the long run. Let's see what's happening over here. All right, so this zone was rejected. Let me go ahead and see. I might end up playing this maybe even while we're on this having this conversation here, because it rejected the 15-minute orb right here again, as y'all see, and now it's pushing back down. So now we're looking for a change of character, most likely from being on the up to being on the down, and we'll go from there. We'll see what it's looking like. But let me go back over to what I was talking about though. So with that being said, I could have easily hit a very nice move if I would have just been patient. I did not let it get into my zone. So I actually, even though this has always been my strategy, it helps when you do write stuff down. So this is what I wrote down as my strategy, as my trading rules. I'll actually pull them up for you here, because they should show up on my computer. So trading rules right here. So supply and demand zone trading rules. Number 1, never mess with the trade until it reaches your zone. Analyze but don't touch. If it does not reach your zone, that's fine. There are other opportunities. As y'all noticed, this never touched. Right here, it never touched, and I still entered. Number 2, check the 5, 15, and 30, 5, 15, 30, and 1 hour chart for direction. In this case, the direction was down. It was very obvious that we were coming down. I had already checked that. Number three, once direction is determined, be confident in it. If direction is not able to be determined, then there are always other opportunities. Keep in mind with my rules, I'm giving myself outs. If I don't feel comfortable, there is always an out. It's better to hop out and still be at where you are than to take a bad trade and be less than where you're at, which is obviously what I ended up doing, unfortunately. Check for break of structure as well as change of character points that may affect the trade. This goes back to actually a trade I did last night where I did not follow this rule, unfortunately, and it happened to be a change of character happening right kind of at the supply and demand zone, and it kind of ended up screwing me over. So always check for the break of structure as well as change of character points that may affect things. Next, determine your target point by looking left at previous highs and lows. So once again, look to previous points that is bounced off of or bounced beneath to see, kind of gauge where you're looking at as far as your ranges. It might go beyond that, but you at least want to have a starting target point. Number six, wait for a decisive push outside of zone in the direction that was already determined. This is your confirmation that, hey, I want to go ahead and take this trade, but now we just need to decide when you take it. Number seven, to be on the safe side, you always want to wait for the pullback into zone to enter. The closer it gets to the quote unquote wrong side of the zone, the better. Pre-calculate your risk reward and gauge your position carefully. Stop loss is set below the zone or above. Below/above zone. The further it gets to the quote unquote wrong side, the better it is for your risk. Decide with yourself that you're 100% okay with the money risk. If yes, proceed with trade. If no, live to fight another day. So when I talk about getting to the wrong side, what I'm referring to is, for example, this. We want for it to push down. Cool. But if you notice, when it got past the halfway point in this purple, like this is probably the halfway point here. Once it gets to this opposite side, this is where you want to most likely get into that trade if you have the opportunity to. Because with this, as I showed, if you would have entered right kind of in this middle area and set your stop loss just above, I'll put it back up here just for show. So if you would have got in right kind of in this middle area, set your stop loss just above, and then set your target, assuming you were entering in after this point and you would actually let it get all the way back, then you already know it's on a downtrend. So it created a little bit of a high, came back, retested. If it's going to continue going down, then it's going to get below this level. It's going to get below this level because this was the lowest low. So if it's going to continue going down, which is already trending down, then your target should be below this level. But, you know, even say if I wanted to be conservative and put it right at that level, that would have still been a 1 to 5 if I would have let the trade, like I said, get to the quote unquote wrong side. But anyways, the cookie crumbles how it crumbles. This is just a quick learning lesson, me going back and analyzing where I messed up at. Like I said, initially I had 10 contracts going, which even 10 contracts like this would have still been a beautiful play. I don't think 405 is too much to risk if you're certain of something. I've set a rule for myself that if I lose more than that, first off, my risk can never be more than 400. I've set that rule for myself. And at the same time, if I make more than $400 in a day, that I will call it quits for the day. Those are two rules I'm implementing for myself. That doesn't mean I can't make more, but if I have a trade or if I get above the $400 mark, I'll just leave it be. But like I said, even with this, even if you set it at 400, maybe you gave yourself a little bit more buffer and maybe your limit is 500, then you would have still produced excellent results. It's still a 1 to 4 trade. If you wanted to be safer and just do a 1 to 2, I would have still been looking at that, which would have put me well into the green on my evaluation. I would have passed it. But it is what it is. I'm not tripping on it. You know, live to fight another day. I still got the account, didn't blow it completely, just fumbled it. And yeah, we're going to keep going like that.